Several subscribers have asked me to look into HIM stock. I first discussed it when it was a SPAC, as OAC was the ticker. I made a 7x return on the warrants in under a year, which I called out to my subscribers at unrivaledinvesting.com. I also bought and sold the stock for around a 90% gain and exited because the valuation was rich, and I wanted to own businesses with better free cash flow profiles, especially with the concern of the Federal Reserve raising interest rates and a possible recession around the corner. Since then, looking at HIMS, the underlying stock has really languished, but if you look at the fundamentals, it's actually solidly outperformed. This is what I want to see with a management team, where they say, hey, we're going to do this, and they blow it out of the water. They do a great job. And this is one of the very few SPACs where management said, we're going to do this, and they crushed it. And so that is a very favorable mark when I'm looking at HIMS. And so in this video, I'm going to talk to you more about what do they do, how have they recently done, where can it potentially go in the years ahead, and why, if you believe what management is saying, they potentially have hundreds of % upside for the stock. We'll cover all that and more. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. If you enjoy educational investment videos, please make a point of hitting that subscribe button. So let's go into looking at the results. You see subscribers up 74% year over year. You look at revenue up 83%. Very strong figures here. They've even turned positive free cash flow. However, this is primarily from stock-based compensation. They haven't really gotten to real profitability yet. That said, they're in a net cash position, so they can self-finance, as long as there's a little bit of dilution from stock-based compensation. When you look at HIMS, the way to think about it, or HIMS and HERS, it's a telehealth and wellness business where it was originally launched focusing on men's health with ED and PE types of products. They've subsequently expanded to cardio, women's health, birth control, STDs, libido, dermatology, hair loss, acne, aging, mental health, anxiety, depression, as well as prospective new markets that could drive significant growth in the future, being around weight or pain management. We've seen tremendous growth with some of the recent weight management, products. So if you could tap into that, put on a nice marketing, blitz like they've done historically, then you could talk about continued hyper growth for this business. And so you're looking at a health and wellness telehealth business, and they're guiding to really strong profits long-term, continued strong gross margins, over 1.2 billion in revenue by 2025, and over 100 million in adjusted EBITDA. So they're saying, look, we will be increasingly profitable. We will keep growing. The question is, where does the stock go from here? Because the stock price is saying, well, I'm not so sure about that. It's been on a rough ride since it's SPAC'd. It's back to $10. At one point, it was over 20. Now it's under 7. So where does it go from here? First of all, in full disclosure, this is not financial advice. Also, a quick plug, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive community available for annual subscribers. When you look at HIMS, at least their financials, and this is why it's so important to be able to study financials, read the financial statements. I offer courses, low priced, to help folks understand, to read financials or to think about valuation. That's also at unrivaledinvesting.com. So looking at their financials, here it is. In the most recent quarter, they sold $207 million worth of product at $170 million gross margin. So really fat margins, really high percentage, of which, of this gross profit, nearly 2/3 of it is going into marketing. So this is really a marketing company at this point, technology and development. You're not looking at a tremendous R&D profile here. This isn't going to reinvent something dramatic. That's just going to constantly do new marketing spins that maybe can accelerate their growth. And the question is, can they cut this, let's say, in half and still have a growing business with significant profits? That's the key question that needs to be proven out. Now, they would say, look, yes, we are a marketing company, but we are transitioning, we are pivoting to a strong recurring business with 20% of our subscribers using personalized solutions. So the appeal of these really fat margins, we will keep them. We won't lose to generics because people will use personalized, customized solutions. For example, they talk about their customized acne cream for men. They also talk about these things like hard mints and things where they talk about that's also a customized product. I'm a little bit skeptical about talking about acne cream as customized. I mean, if you've had a very favorable experience using a customized product from Hims and Hers, I'd love to hear it, because when you check out the product reviews, and keep in mind 180 reviews isn't, a full market, but it is a quick sample. And this was from a different website, where they showed really a lot of people didn't like it. A lot of people were giving it 1 star. Some people were saying they should sue the company. Other people are saying it's a straight up scam. That concerns me when you're looking at a marketing company. I mean, it's one thing to market something that's really compelling. It's another thing to market something that people say, hey, I paid for something because I saw this, and then I realized it actually didn't deliver on what I wanted or what they promised. So that is the chief concern. Can they get to real profitability is secondary to like, hey, are you actually pleasing your customers? And when, you're looking at 180 reviews online, now, once again, that's not a lot. You can quickly Google it, see it yourself. It makes you wonder, is there a concern there? So first is, are you delivering a product that people actually really like? 2, will you be able to get to those margins over time? Because really so much of your money's going into marketing right now to drive that growth. Now, they do throw out figures like, we have an 85% retention rate. You always have to dig into the footnotes. That's 85 retention rate for customers, I think, that have been there for over 2 years. So they might sign on a bunch of new customers, hence why they're spending so much on marketing, but then they lose a bunch. It's unclear the exact percentage that they lose in any given month or year from their prior cohort, but I suspect it's a lot. And so they're really saying, okay, once we get someone hooked and they've been using it for 2 years, then our retention rate is fantastic. They previously did have some charts, but they had, that showed, hey, we have great retention, but they haven't really cleared up that picture of, well, what's your actual churn for that first year of customers? Is it people trying things out and saying, you know what, this really just isn't right? So looking at their financials, this is a hypothetical framework. If you believe management, they're talking about 20 to 30% EBITDA margins. I say, maybe they get to, high single digits, maybe, mid-teens operating margins. If you believe management and they continue to roll out new products, which I suspect they'll be able to do, and maybe international expansion as well. Throwing on some sort of below market multiple, teens multiple, there's a chance that this stock is up 100 to 300% upside, let's say over the next 5 years. This is, once again, if management continues to deliver and you start seeing the real profitability, and then be able to pull back on marketing expense. Part of my concern here is that you still see just management just unloading millions of dollars worth of stock. Now, I'm sure they want to have nice houses and everything, but if you truly believe that the stock could be worth, multiples in the future because they continue to execute, then it wouldn't make sense to sell. Personally, I look at this stock and I'm putting this still in the too hard pile for me. Is it, could it run up 300% like I'm calling out? Absolutely. That's one of the possibilities, and I'm fine missing out on that. I mean, I personally own another medical product that, for me strikes me as closer to unrivaled, and they're growing at comparable rates, and management owns 40% of the stock and they're not selling. So, it's a very different dynamic, and I'm saying, hey, this one has 300% upside, and it's not really a marketing company. It's really hey, we're going to launch real products, real unrivaled products. And that's what's going to drive the business. So I think that's really the question, if you're a Hims shareholder, is are they growing because they're unrivaled and their products are going to be exceptional and they don't have to worry about margin pressure, let's say from generics, or for customers saying, hey, I just don't want to pay for this highly marketed product, this high margin product. Maybe I can get something cheaper in the future. So the question is, will that happen with Hims? Is this really a marketing company, or is this an unrivaled company selling products that people say, hey, I really can't get elsewhere, or you're delivering something that's just not elsewhere in the market? For me, at this point, I'm still thinking that this is closer to a marketing business where let's see them, prove out their profits. Let's see them deliver real free cash flow. And ideally, I'd like to see, if I were to revisit it, I'd want to see customer reviews where people are saying, hey, yeah, this really did solve my hair loss issues, or, the acne or whatever. So that's, I'd like to certainly see more favorable reviews. Now, maybe it's a little bit of the squeaky wheel getting, the attention here, or, mixing metaphors. But, like maybe you only get the bad reviews where the people that are like, hey, this ED pill was fantastic. They're not writing their reviews. So, I just know I don't use their products personally, but, like, hey, if someone has and they've loved it, feel free to leave a comment below. I'd love to hear it. And I hope this video, has been helpful for you. If so, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.